All right. Well, we're already at over 60 participants. So at 2 minutes into the hour, I think we'll just dive right in. Welcome, everyone. We're really excited to have you here today. My name is Andrea Zinn. I'm the director of CSAF, and we're very excited to present this year's annual webinar. CSAF only really does one per year, so it's a big event for us, and it goes off of the report that we just published with the annual data insights and state of the sector overview. So we're excited to welcome everyone to the room today. I will just ask guests to please keep their microphone and video off during the webinar so that we allow space for our speakers. And then please engage in the chat box throughout the webinar. You can ask questions throughout and introduce yourself. And then during the Q&A session, we'll invite live questions and written questions as well and try to get to as many of them as possible. So a quick overview of our agenda today. I'm welcoming you now, and then we'll soon invite Ada Dokle, the Data and Learning Manager from CSAF, to give an overview of the data trends for 2023. And then we'll host a panel of practitioner perspectives. We've invited 3 members of the CSAF Steering Committee, John Mark Debrecon, Natalia Rodriguez-Vega, and Robbie Whitkop, to share some of their insights based on their institutions that they're leading and the types of challenges that were faced in 2023 and what we see looking ahead to 2020, the end of 2024 and into 2025. And then we're allowing time for a pretty healthy Q&A session as well. So please keep your questions flowing throughout, and then we'll try to prioritize them in the last 20 minutes of the call. So before we get started, I do want to introduce the Council on Smallholder Agricultural Finance. For those of you who need some of the background, CSAF is an alliance of lending institutions and field building partners with a shared commitment to building an inclusive and sustainable financial market for agricultural small and medium-sized enterprises, SMEs, in developing countries worldwide. And CSAF members convene to share learning, develop industry standards, and engage other stakeholders. So we promote 3 sets of goals. First, facilitating market growth to meet a greater share of the vast financing needs of agriculture SMEs. Second, promoting responsible lending practices and social and environmental standards to ensure that that market growth for agriculture SME finance contributes to positive impact on smallholder farmers, on workers, on rural communities, and of course, on the natural environment. And then thirdly, building a stronger ecosystem for inclusive and sustainable financial markets. That means engaging with other sector stakeholders and setting the stronger ecosystem up for more collaboration. And we're always talking about agricultural SMEs at CSAF, and you might be wondering why. So you've probably heard that agriculture is very risky. Agriculture is facing price risk, economic and political risk, organizational risk. There's a lot of challenges that agriculture SMEs are facing, and that comes with a high cost, but also a high impact. So CSAF members really believe that SMEs have the potential to drive inclusive and agricultural growth. They are at the center of connecting smallholder farmers to market access, and they also are very well positioned to hire women, to employ youth, to push climate resilience in their communities. So a lot of the origins of CSAF were because many members were facing these risks and challenges in the agriculture sector independently, but many members were also having work and collaboration in other parts of their portfolios. They had portfolios in financial inclusion, and they saw that there was a lot more sector resources and tools available to evaluate and serve microfinance clients, and a big opportunity to provide infrastructure to the agriculture SME finance sector and to foster collaboration in order to avoid making the same mistakes and to face those challenges as a collaborative network rather than independently. And that is what led to the beginnings of CSAF. Today, we are a consortium of 19 investment institutions, and I'm excited to welcome our newest member, IDH Investment Management, who joined us as a global affiliate at the beginning of the year. So we had a very active year this year, in addition to collaboration at the regional and global levels, as well as the annual data analysis. We welcomed Ada Dokle to join the CSAF team as our data and learning manager. And that's leading us to be able to evaluate the data even more in depth, to establish new benchmarks And under her leadership, we've also co-launched an agriculture SME learning collective alongside other industry alliances. So this learning collective is based on accelerating evidence building in the agriculture SME sector, and especially around links between catalytic capital, agriculture SME lending, and improved livelihoods and environmental outcomes. So these conversations about the Learning Collective, they started at CSAF convenings, and a lot of other conversations have also started at CSAF convenings, like ones that eventually led to Aceli Africa, as well as bilateral partnerships. So we have this year's convening upcoming in October. We're looking forward to spurring more dialogue. But we can also start some of those important conversations today. They don't have to wait for in-person convenings, but also on events like this and in smaller groups. And lastly, before diving into a lot of numbers, I just want to thank our field building partners who are institutions that are aligned with our goals of promoting a more inclusive and sustainable agriculture finance sector. And in addition to being learning partners, their support ensures that the data and the insights that will be presented soon by Ada, as well as those that are available in the annual report and in our open data portal, remain publicly available. So thank you to our field building partners for joining us along the way. So jumping into the data, so in 2023, CSAF members collectively dispersed $697 million, nearly 700 million. Those are annual disbursements. So in the last 11 years of data, that's nearly $7 billion dispersed to the agriculture SME finance sector. And I really want to pause and recognize the vastness of this number. 7 billion comes with a lot of hard work in the region and at the strategic level. That's nearly 16,000 loans. So many of you know that investment officers are working passionately because they believe in the impact generation of these loans. And it also comes with a lot of lessons learned along the way. In 2023, we saw some of those lessons come and manifest as risk. Some of these challenges ultimately led to a decrease in overall lending, a slight decline of 8% from the prior year. This wasn't a huge surprise, as lenders were pretty quick to note last year that although 2022 disbursements increased halfway through the year when the data came out, 2023 was already affecting some of these, or already feeling the effects of some of these increased risks. And we were expecting a decline in the 2023 data. However, it's really notable to see that the total number of borrowers actually increased from last year. And particularly, we saw an uptick in borrowers borrowing loans of less than 250,000. So it was interesting to see that although overall disbursements decreased, we saw a larger reach to these smaller borrowers who are more underserved traditionally than borrowers borrowing at larger loan sizes. As I mentioned, the risk increased overall, and this was driven by especially borrowers having challenges with overlapping crises. So agriculture SMEs, they face price volatility. In past years, they've also seen supply chain challenges, of course, changing weather, increased cost of inputs, and labor shortages, as well as other setbacks. We particularly saw risk increase in South America and Sub-Saharan Africa. The third major trend is that coffee activity saw its steepest drop in the past decade. We anticipated this because overall coffee price in 2023 was lower in 2022. It was lower than 2022, and naturally that reduces the demand for financing. So as a cooperative has the same volume, export volume at a lower price, that naturally will lead to lower financing demand. And this was mostly driven by Peru. There was an overall drop in coffee disbursements by 86 million globally. And lastly, as lenders noted this increased risk, in response, they also increased their technical assistance to help borrowers mitigate those risks. So we did a survey with lenders, and they reported that almost all lenders were increasing their business development services, especially to increase management capacity and build climate resilience for their borrowers. And with that, I can end the high-level trends and invite Ada Dokle to the stage to share some of the more nuanced data trends in 2023.
Thanks, Andrea. So I'll start by reiterating some of the high-level numbers that Andrea already mentioned. So if we move to the next slide, what we see in 2023 is that the CSAF collective reached $697 million annually. as lenders decreased their disbursements after 2 peak years. This financing reached in total 675 businesses, which work across the value chain from input suppliers to exports and traders in 55 countries around the globe. And these businesses aggregate roughly 2.7 million smallholder farmers. So these are high-level numbers, and I think we need to zoom in a few trends to look at what happened in 2023. We start by looking at disbursements, and the 2023 data, like Andrea mentioned, showed that the CSAF member lending declined by 8%. After what we saw a growth in 2021 and some stabilization in 2022. The decline in disbursement is something that was shared across most of the lenders. However, there were a few who reported an increase in disbursements in 2023. What was interesting was that we saw the median growth rate to be minus 10% last year, which was almost a mirror of the 10% growth that we noticed in 2022. Looking at the chart on the right, we see the disbursement by region, and usually we see a lot of variation in disbursements by region. One thing in common that we saw this year was that the decline in disbursement was shared by the 3 main regions, and by 3 main, I mean Sub-Saharan Africa, South America, and Central America. However, there is variation within the decline. We'll start with South America, which is the region that experienced the steepest drop after 2 years of increase. And if we talk in absolute term, this decrease is over 50 million from the prior year. We noticed that in South America, the disbursements declined in most of the countries, but the trend was largely driven by a contraction in Peru. If we zoom in on Peru, Peru is a country that receives 74% of the regional disbursements in 2023 and close to 20% of the global disbursements. Last year, the disbursements in Peru decreased by 22%, which is a big decrease, and it was largely affected by coffee. 2 factors that are associated or have contributed to this decrease are considered to be the overspeculation of coffee prices and the coffee harvest time. Next region to look into is Central America. We see a decline in Central America again from the prior year, but Nicaragua is the country that receives the largest disbursement in the region. It accounts for over 40% of the disbursements in the region, so not as much as Peru. However, the disbursements to Nicaragua decreased, and again, affected by coffee disbursements. One thing we noticed in the region, and especially the Nicaragua, is the median loan size for existing clients grew to over $1 million, which also reflects like a greater presence of a bit more mature agriSMEs in the region. Next is the Sub-Saharan Africa, which is the region that accounts for really the largest share of global disbursement in 2023, which is 38% of these disbursements. Again, disbursements decreased in Sub-Saharan Africa, and the story is a bit more nuanced here, as is usually with a region. We see that some countries experienced an increase in disbursement, which are Uganda, Mozambique, and Nigeria, while in other countries we saw a decline in disbursements, and these are countries like Kenya, Malawi, and Burkina Faso. We'd like also to highlight South and East Asia, which is a region that continues to account for a very small share of the disbursements, 8% more specifically. And this is the only region that experienced an increase in disbursements, which are linked closely to a handful of large borrowers in the Philippines and India. So later during this webinar, you'll hear the panelists go elaborate a bit more into the reasons and the factors that have affected these trends, but I'll use the time to go into the next slide and look into what happened with disbursements by value chains. You may already know that coffee is the most financed value chain in the CSAF portfolio, and coffee disbursements last year experienced the largest decline, close to 20% decline in 2023. However, the share of coffee lending still remains high. It accounts for close to half of the overall portfolio. But if you look at past the trend, you'll see that up to 2016, the share of the coffee disbursements has declined. And we noticed that there was a CSAF, members were trying to diversify the portfolio. But since then, we noticed an increasing share in coffee until 2023, where there is a decline from 57% to 50% of the total disbursements. So cocoa is the second most financed commodity. In terms of share of disbursements, you'll see a small increase in share from the chart that you're seeing now. However, in absolute term, disbursements to cocoa slightly decreased in 2023. The majority of the disbursements went to Côte d'Ivoire. Côte d'Ivoire, like 65% of the disbursements, followed by Peru, 12% of total disbursements. Disbursements to cocoa in both of these leading countries declined last year. The third most financed commodity are nuts, which dropped slightly in 2023, but still remained higher than 2020 and 2021 values. Again, half of the disbursements to nuts went to Kenya and Nigeria, which observed like different trends. Disbursements to nuts in Kenya declined while increasing in Nigeria. In the next slide, we're gonna look at the coffee disbursements by region, and in absolute term, coffee disbursement decreased to 347 million in 2023, down from 427 in 2022. By region, this means that coffee disbursements declined in the three main regions, as you see in the chart, but the decline was more pronounced, as you may already have hinted by now, in South America, by disbursements in Peru specifically, and where we see that there is the highest number of concentration of coffee borrowers. The second country that impacts these decline disbursements is Honduras. This was around disbursements, some of the insights we wanted to share with you. And next is the chart in terms of number of clients, as you see. CSAF members, Andrea mentioned, reached 675 clients in 2023, which marks a slight increase from the prior year, despite the decline in disbursement. What was interesting last year, we saw that lenders collectively added 108 new clients, which is more that they have in any year since 2016. However, still, existing clients account for 84% of the businesses in the portfolio. Looking at the regional level, the data shows that in Central and South America, the lending focused largely on existing clients, which accounts for 85% of the clients in the region, and similar share is observed also in Africa by 82% of the clients in 2023. However, what we noticed was that the new clients, while in prior years were mostly in sub-Saharan Africa, this year we saw that only a half of the clients were in the region, and the rest are spread across Central America and South America. In the next slide, we notice that additionality still remains high in the CSAF portfolio. In the left-hand side, you'll see that 76% of the CSAF borrowers were financed by only one CSAF, which is slightly an increase from the prior year. And on the right-hand side, you'll see that this, in terms of share of disbursements, accounts for 49% of overall disbursements, which is an increase considerable from the prior year, the 37%. However, if you look at the top parts of the chart, you'll see that 3% of the borrowers that were financed by more than 3 CSAF lenders account for 17% of the overall disbursements. If we looked at this, at the breakdown by region, we would notice that close to 70% of the loans in the Americas are financed by one CSAF member, and this share increases to 80% in America and 85% in South and East Asia. Last but not least, we're going to talk about risk. In 2023, we noticed that the overall level of normalized portfolio at risk greater than 90 days was 8.1%, which is almost double of the prior year. Again, here the experience differs across regions, loan size, and value chain. By region, we saw that South America experienced a worsening of the quality of the portfolio as PAR 90 increased from 3.6 to 6.5. However, PAR 90 remained higher in Africa, reaching 9.5%, but also increased slightly in Central America, as you can see, to 2.3%. We have mentioned in prior years' analysis also that smaller loans continue to present higher repayment risk than larger loans. This year, we noticed that PAR 30 increased for loans under 250K, which was close to 16.2%. Portfolio also decreased for larger loans, especially loans over $1 million. However, we saw that there was a slight improvement in the loans that were in mid-size, so from 250K to 1 million. I know it looks like we presented a lot of data here, but we handpicked some of the insights from the report to show to you. We would like to say that there is a CSAF open data portal out there that Andrea is showing a snapshot, and we'll share the link with you also on the chat, where you can do more analysis on the data and look into other data and insights that we didn't have time to present here. So we encourage all of you to use the data portal for your own benefit and try to do more analysis using CSAF data. Thank you.
Thank you, Ada. And I will say that Ada puts in a lot of work into this data analysis and to putting it on that portal, and it's a great tool. It's dynamic. You can explore things by different countries, and we really encourage you to dive into the data further by exploring it on the open data portal. Thanks, Ada. Before we get into the panel, I do also want to highlight that, as Ada mentioned, the risk increased in 2023. And we do have to take that number with some context. As you know, many of the borrowers are seasonal. So when a borrower is borrowing, let's say like a 6-month trade credit and paying it off before the end of the year, that healthy portfolio doesn't make it into the risk evaluation. So there are some nuances there, but of course it is consistently measured with the same methodology every year. So it is a proxy reflection of risk as well. And with that, I think we can launch into our panel and invite some of our practitioners to share their perspectives. And today I'm pleased to welcome our steering committee members, Jean-Marc, Natalia, and Robbie, to the floor. And they have been great leaders and allies to CSAF over the past year for Robbie and years before that for Natalia and Jean-Marc. So they are also very well qualified to reflect on some of these trends. So if I can invite Jean-Marc, Natalia, and Robbie to turn on your videos, we can just jump right into the panel. For the audience, if you have questions throughout, please put them into the chat. We'll start with the panel and then move into a Q&A. So to kick off, we saw from these data trends that CSAF members dispersed nearly 700 million. In 2023, this was a decline of 8%, and there was more risk. There was also a major decline in coffee disbursements, which is about 50% of the portfolio. So This is in part due to overall decline in coffee prices. I would love to invite you, Robbie. I know Root has strong experience in the coffee sector. If you could just explain for the audience a little bit more about how the coffee market may have affected disbursements in 2023.
Sure. Thanks, Andrea, and thanks very much for having me on this panel. Yeah, maybe to start off on a positive note. So last year, Root Capital mobilized about 111 million in financing for 213 agricultural enterprises, reaching over 500,000 smallholder farmers. But of course, as Ada noted, 2023 did not come without its challenges. Our portfolio is primarily in coffee, and just as high coffee prices provided tailwinds supporting high financing demand and growth in our coffee portfolio in 2022, the average coffee price in 2023 was about 25% lower, impacting credit demand. So why is that? Most of the loans that the CSAF members make are called trade credit loans. They're loans to provide financing to exporting entities that are using the cash to purchase coffee and cocoa and other export commodities, aggregating those and ultimately fulfilling those export contracts. And so when coffee prices go down globally, that generally translates to lower prices as well in the local markets. And so they just need less money to buy the same amount of volumes to fulfill those export contracts. So that's one reason for the lower demand in financing in the coffee sector. Secondly is related to risk. And so this is another thing that Ada touched upon a little bit, in particular in Peru. At the tail end of 2022, there was a precipitous drop in the coffee price. And it's actually the volatility relative to the actual just drop itself, but the how quickly it dropped and it stayed low impacts clients that are trying to manage price risk. And so in Peru, that drop happened to happen at a time when many of the clients had purchased inventories, but had not yet fixed their prices on the sales side. And so what that does is that impacts the potential margins that they can make on the coffee, and ultimately, raises the risk profile of those borrowers because their margins are going to be really impacted. And so that played out in 2023. As you mentioned, there is a bit of a delay effect in terms of how the risk plays out in the portfolio. In 2023, we saw a higher attrition rate among clients in Peru in particular, and not just the small ones, the bigger ones as well. And, to kind of prudently manage risk during that time, we looked at a number of borrowers in that area that had, high risk profiles, and decided that we wanted to continue working with them, of course, to continue to support their business, but at lower loan amounts.
Thanks, Robbie. I think that reflection is shared by several CSAF members, especially in 2022. The price volatility led to a lot of speculations. Many borrowers hadn't fixed their contracts yet, and then were really hoping that the price would go back up, and it didn't, and that led to even greater losses. So I think that we've seen over years that price volatility remains a constant risk in the coffee sector. And continuing in the coffee market, one thing that I've heard more and more from lenders this year is that there's been also some shifts in market practices. Some buyers have suspended purchases or delayed contracts, and there's been some supply chain disruptions and container shortages. So Natalia, Global Partnership, also invests in the coffee sector. I would love to hear your perspective on how these market behavior shifts impact smallholder coffee producer organizations, and how both producer organizations and lenders are adjusting to these shifting market practices and disruptions.
Yeah, thank you, Andrea, and thank you everyone for joining the webinar today. So just to put your question into context, Robbie mentioned a little bit about the price volatility that we saw in 2022 in coffee prices. And Andrea, you alluded to, and Ada also mentioned some of the supply chain disruptions. So I just want to highlight a little bit that particular point, because we have heard, on the news about all of these disruptions happening in the Panama Canal, in the Suez Canal. So that has been a critical piece in terms of how to plan for these producer organizations, how this is impacting when buyers request the product. And just to give you a data point, in the case of the Panama Canal, which the reasons for the disruption there is related to the drought and climate change, low rainfall, daily in the Panama Canal, about 40 ships cross the canal. So that's on average what you normally want to see in terms of activity in that area. At the lowest point at the end of 2023, that amount of ships cut into half. So when you think about it, you know, for countries like Peru that depend so heavily on that particular way to transport the product, and then when it happened, which was around the end of the coffee season in Peru, that had a significant impact in terms of product being delayed, while buyers, you know, requesting that the contracts may be suspended because they were not getting their product on time. So that was one particular piece in terms of market disruption, how it is affecting some of these producer organizations. Then on top of that, we are facing a situation in which interest rates have been higher for a longer time than expected. This means that holding inventory is very costly. So many of these buyers are now prioritizing in terms of inventory management, just having on-time product. They don't want to hold inventory. They don't want to anticipate that maybe there's an increase in demand. They just want to have whatever they know they can actually sell. So that means that, you know, when they think about their plan for the season, you know, if interest rates are likely to stay high, you know, maybe things will change in the second half of the year, but holding inventory continues to be expensive. So that means that the demand for the product is likely to continue to be limited because of that. So when you take these two pieces, you think about the producer organizations. What we are hearing is that they understand that these things are happening, but these things are also outside of their control. So what they're focusing on is what can I control now that I can actually do to be able to benefit my organization. So what we're seeing is that many of them are focusing on strengthening the relationship with the buyer, so they understand better what is happening around the globe in terms of, you know, supply chain or inventory management or things like that. So strengthening the relationship with the buyer has been key for many of them to understand how to plan the situation. And then in addition to that, they're also focusing on strengthening internally. So building the capacity of the members in terms of financial management, understanding how, you know, there are things like education, you know, of the members, of things that in terms of quality, management of people, labor, all of that. So focusing on the things that they can control is one of the things that we are hearing in terms of how producer organizations are trying to adjust to, you know, all this context and all this volatility that we have been talking about.
Thank you, Natalia. That was just an excellent overview of not only the challenges that the borrowers are facing in the coffee sector, but also how these like macroeconomic factors are affecting buyer behavior, which is then, of course, directly affecting borrowers as well. And Robbie and Natalia just shared great overviews of the coffee sector. Coffee, of course, is a very important commodity for CSAF lenders and their borrowers. It's also just part of the story, about half of the story. So I think it's also good to take a step back and go off of what Natalia just mentioned about raising the higher inflation rates and higher interest rates. Is one part of the shifting macro environment that's been really impactful to CSAF members this year. I know I've had a lot of conversations with John Mark about how these macroeconomic factors, such as inflation and rising interest rates, have impacted disbursement trends. And John Mark, I would love for you to share on this stage how they are potentially affecting impact investors' ability to cover costs and the way that we're used to doing business.
Thank you, Andrea. Well, if you don't mind, maybe we could take a couple of step backs and rewind to March 2020. So we have the global pandemic, and with the lockdowns, the world is in shock. Many of us are questioning the ultimate sustainability of our economic model, the way we produce food, the way we consume food. And we all notice that there's an increased interest for sustainable agriculture and for certified produce. And for the following 2 years, and I think this is clearly reflected in the charts that Eda shared with us, the portfolio quality for most of us involved in agricultural finance have tremendously improved. You saw in the charts it went as low as about 4% portfolio at risk, which is quite phenomenal for an activity which is usually considered as the problem child of development finance. But things changed in 2022 with the invasion of Ukraine and energy prices going through the roof, fueling global inflation combined with economic stagnation. We enter truly what some call a polycrisis environment. So an environment where you haven't even exited one crisis, that you enter into another, they combine, and all the effects are just compounding. And this is the environment in which we operate today. It's a polycrisis environment. Adding to that, the Fed increased US fund rates. So for all of us who have to borrow US dollar to then on-lend them, the cost of funding went really high. And I will give you the example for Altafin. Prior to 2023, we used to pay about 2.5% to 3% average cost in dollars for funds. By the end of 2023, we paid about 5.5% to 6%. So it nearly doubled. Now, what would a rational actor do? Well, a rational actor would transfer that increased cost to its ultimate clients, in our case, our partners. Well, we didn't do that. And maybe you'll say that we are not rational, but at least I'll try and explain with 2 reasons. The first one is we are a little bit more sophisticated than the farmers we finance. And since 2016, for instance, we had entered into interest rate swaps, so off-balance sheet transaction to cover the risk of rates going up. And with these swaps, we were paying a fixed rate and receiving a floating rate. So in this current environment where Fed funds are increasing, we are receiving more money under these swaps, and this somewhat mitigates the increased cost of our funds. And the second reason is, of course, farmers' organizations are more exposed to all the risks that we are faced with. And it would be very difficult for us to justify how we would charge even more or transfer the whole cost, basically, of our increased cost of funding to them. It would make their life more miserable, and frankly, we would be part of the problem rather than being part of the solution. So our decision was to absorb about 70% of that cost of funding increase and only transfer about 30%. Now, not all CSAF members are funding in the same way. Some of us are large funds built on economies of scale. Some are organizations, non-profit organizations that can rely on philanthropic funding. But regardless of that, all of us operate in an environment where, due to this combined crisis, the risks are increasing. And with increased risks and increased volatility, there's a reduction of margin and therefore reduction of our capacity to absorb risks.
Thank you, Jean-Marc. I think I really appreciate you speaking openly to these challenges. I think the changing margins for impact investors and other lenders as well is really an important conversation right now. And especially when those challenges are met with increasing risk, there's also associated costs of those increasing risks. And one of the many risks that's top of mind for CSAF members is climate risk. I think it's top of mind for many people in our sector, if not everyone, beyond the lenders themselves. So there's been increased climate change impacts. We've seen many of our lenders acting in response through increased technical assistance, as well as new climate finance products. Root Capital has been active in this space, and would love if Robbie can share a little bit more about how Root Capital is adapting its financial and advisory products to support climate resilience as one of the main risks that smallholder farmers and SMEs are facing.
Sure. Root Capital works closely with agricultural enterprises who promote climate smart and regenerative agricultural practices, such as agroforestry and soil conservation that enhance farm resilience and reduce greenhouse gas emissions. We provide them with advisory and financing to deepen their investment in climate solutions, which ultimately benefit the rural communities. Now, what does this look like in practice? To respond to the climate crisis and adapt our services to support clients, we developed a climate adaptation planning advisory. And so what this looks like, it's a team of agronomists that we brought on board to sit down with the clients, look at where their suppliers are based in terms of geolocations, and using the technologies, look forward and understand the types of climate shocks in those particular areas that they're likely to see going forward and currently, and have conversations around what types of investments can help to mitigate those shocks and build resilience for their farming communities. And so it's a process that ultimately is client driven. They're looking at the types of challenges that they're likely to face and developing solutions and ultimately investments around it. And these are the types of things that we want to be able to invest in on the back end of that process on the lending side. And in terms of bridging that gap, oftentimes these are new types of investments for the clients, not always, but oftentimes. And so there's support needed to be able to develop the business plans for these and ultimately be able to apply for credit for these types of investments. And so these are the types of advisory support leading up to a loan and climate investments that we're supporting. Now, in terms of one example of a type of investment that a number of our clients are prioritizing in Central America, off the back of that climate adaptation planning, many of them are looking to expand their fertilizer supply, which is channeled through their internal credit funds to farmers to build soil health. And so that's one of the examples where our advisory team is working closely with the technical assistance staff within our clients to analyze the soil health and develop specific fertilizer plans tailored to their supplier base. And we support that with basically pre-harvest credit, allowing the clients to buy in bulk those fertilizers and distribute, or to simply distribute cash to the clients or to the farmer suppliers to buy specific formulas to address that soil health. So that's one example. Now in 2023, Root Capital provided $1.9 million in targeted climate finance to help businesses and farmers increase investments in climate finance. In general, we're seeing businesses and farmers want to make these investments, but financing needs to be ultimately the right size and affordable. The types of investments they're prioritizing that we've seen include things like nursery expansion, including drought-resistant seeds and cover crops, solar dryers, which are basically greenhouses to be able to allow drying to reduce the post-harvest management of the crop and ultimately improve the quality of the product, especially in many areas where they're seeing rains are much more unpredictable relative to the past, and other things like solar panels and to reduce carbon footprint and cost at factories. These are typically smaller investments, especially smaller relative to our average working capital loans, and often require longer term payback periods. And so ultimately, the approach, it's very much a credit plus capacity approach to support clients and helping them to prioritize their investments and ultimately finance those investments on the back end of that prioritization process.
Thanks, Robbie. It's really innovative work, and it's exciting to see Root and other CSAF members really go beyond financing and to have that financing plus approach. I think we've seen that increased technical assistance this year across members, and there's a lot of work to do. There's a lot to talk about. I think we would need another hour on this call to cover all of the things that the members are doing. And I do want to jump into the Q&A and make time for at least a few questions. So maybe one final question for Natalia before we transition to the Q&A. You know, we're talking a lot about risk. We're talking about climate risk, the macroeconomic environment that John and Mark talked about. And considering all these challenges and risk of investing in agriculture, there might be the question of why are we doing this? And it's important to kind of take a step back and remember the reason that we are investing in the agriculture sector and the impact it generates. So I would love, Natalia, if you could just transition us into the Q&A with reminding us why it's more urgent than ever to support agriculture SMEs, especially considering the global threats and the regional dynamics that have emerged.
Yeah, I don't think I can say anything that you know, is not clear for the people here in terms of why it's urgent to support agriculture SMEs. But I think one data point that I would like to highlight is what I think Era mentioned at the beginning, is that just for CSAF, you know, we are supporting, last year we supported 675 agriculture SMEs. Those entities are helping 2.7 million smallholder farmers. So there's significant leverage in terms of we support one agriculture SMEs and the amount of smallholder farmers at the other side, which are the population that we all want to support. We know this population is marginal. It cultivates very small plots of land. Doesn't have access to technology, doesn't have access to capital, to skills, to so many things. So a way to be able to help them, you know, in terms of being climate resilient, what Rowie was indicating around adapting to all these changes that we're seeing in terms of climate change, is by supporting these organizations that support so many other smallholder farmers on the other side. You know, these, you know, are the people that are providing food for many of us. So if, you know, this is a way for us to be able to, you know, make sure that that continues, that they continue to have a good livelihood, and that they can continue to support, you know, what we eat every single day. So this is part of the urgency, you know, in terms of being able to support them. Of course, there are many other things that I can mention and people can highlight, but I want to bring us back to, at the end, who's at the other side, and how us, by supporting these agriculture SMEs, we're helping smallholder farmers on the other side.
Thank you so much, Natalia, for that important reminder. I think it's always important to stay grounded in why we're doing this work and the type of impact that the agriculture sector can generate. With that being said, we can allow 10 minutes for the Q&A. There's a lot of questions in the chat, so hopefully we can get through a few of them. I'm going to start with one that I see. We did talk a lot about coffee, cacao, and nuts are also major representation in the CSAF disbursements. And Matthew asked about how lenders are thinking about diversifying more moving forward, if lenders are thinking about diversifying more. I see that Fausto also asked a question about diversification into local or subnational food systems instead of value chain commodities. And I think, John Mark, maybe you can speak to, probably to start, the challenges of why there's a large commodity concentration, and then what kind of movements help support us move into more of the food sector, agriculture SMEs.
Yes, of course. It's not really a surprise to see that the coffee and cocoa sectors are dominant in the volumes of CSAF, because these are the most formalized markets, and therefore they are the ones where most of the money will go, because it's also where you find the largest transactions and where business development is not the easiest, but at least less challenged. Now, at Altafin, we're also active financing other value chains and produce, and we've gone up to 13 this year. But we have to be realistic that a lot of the smaller produce that we are financing don't necessarily have the same critical mass, or will never have the same critical mass than what you find in coffee and cocoa. That doesn't mean that they are less important. On the contrary, they are more important from an additionality point of view or an impact point of view, it's a more compelling case. But it's more difficult to develop that. It's more difficult to find size. And of course, they are more challenging because they might not necessarily be able to repay. But fundamentally, we're building that up. It's slow, of course, and that's probably why you're not seeing it so strikingly in the figures. If I may maybe mention something, we're launching an initiative this year with the NGO Oxfam. It's a new fund focused on women in the missing middle, and you'll have tickets of about $100,000 to $150,000. So it's quite small, and this will be 75% agri. And we will look at some of these less formal value chains, but it will be very challenging. And this is why we work with one of the best NGO to have the capacity to bring more technical assistance. And this has been mentioned in this panel here, the importance of technical assistance for all of us going forward.
Thanks, Jean-Marc. I actually, there's another question in the chat about technical assistance from Chris Patterson about just a little bit more color on how TA services are delivered across CSAF members, whether they're outsourcing and how we collect that data. So this was actually the first year that we did a more comprehensive questionnaire on technical assistance. We didn't, in the questionnaire specifically, ask members to explain whether they are directly distributing TA services or hiring a third-party distributor, but I think it's a mix. There are some that, like Root, that have a whole advisory team. There are others that work in specific projects. I think 7 or 8 of our CSAF members are part of Snoop, which is a facility that is co-financing technical assistance for agriculture SMEs and financial inclusion in the agriculture sector. So many of our members are involved in the Snoop facility and delivering TA through that. So it's quite a mix, but I think what we did collect in this year's data was that there was an increase in TA provision, and hopefully in future years we can add a bit more color on what that looks like. There's another question which I find very interesting, which is about panelists' views on organic certified production, especially given price volatility and market realities in the coffee and cocoa sector. And I know there's been a shifting market demand on purchase of certified coffees. I'm curious if Robbie can speak to what you've seen in the sector and how this might have impacted the price delivered to smallholder farmers, or just how producer organizations are dealing with these market shifts of certified coffee purchase.
Sure. Yeah, I'd say, as a whole, Root Capital is working with a lot of businesses that already have the fair trade and organic certifications, Rainforest Alliance, et cetera. And we do see, the value in terms of what that brings in terms of premiums that ultimately benefit the businesses themselves, but also the smallholder farmers and their incomes. And what we've been seeing is generally the appetite for the businesses who, of course, have the certifications to continue to sell and gain those premiums. But on the buyer side, I think this kind of gets back to some of the macro trends that Jean-Marc and Natalia were getting at. There's been higher interest rates, which is impacting the buyers, right? So they have not only a higher cost to carry, but also higher financing costs. And so I think there's less liquidity within the buyer market. And we're seeing more coffee being sold locally. And so oftentimes the local sales are not, it's just conventional, it's not certified coffee. And I think the major reason for that is, many of the larger local buyers are these very large multinationals that have a lot of access to credit, and therefore, the money's there in the field, and they have availability to purchase on any given point. And so that is a trend that we've seen, and I think it's kind of relating back to that higher interest rates factor, and we'll kind of see how that plays out going forward, hopefully, as we expect rates to come down.
Thank you, Robbie. I think that's a great response. We have 3 minutes left. I saw that there was a question about data in the chat. I'm hoping Ada can answer. Robbie and Natalia spoke a little bit to the reasons for the jump in par, and there was a follow-up question from Anders about whether the write-off rate was proportionate. Ada, could you share a little bit more about the write-off data from 2023?
Yes, Andrea, I think the write-offs remained at very similar level to prior year at around 4%. But in terms of number of loans that were being written off, I think the same levels as last year were being written off. We don't see like a big increase compared to prior years.
Thanks for expanding on that. Well, with 2 minutes left, I think I would actually love to invite each of the panelists to maybe give a 30-second response on just what are we looking at ahead? We've talked a lot about 2023, what happened last year. We're halfway through 2024, so I think we can get a decent outlook on how we expect the rest of the year to go. But what are you thinking about when you think about finishing out the year? What are the key challenges that you foresee for the sector? And what is your kind of vision and future outlook? So maybe we can just go through each one, 30 seconds. We'll start with Natalia, then John Mark. Or sorry, Natalia, then Robbie, then John Mark.
Yeah, I would like to focus on the last part of your question, Andrea, about the vision. I have been part of CSAF or representing global partnerships, I think for 7 years or something like that. And what has really impressed me is the amount of collaboration and the things that we have been able to achieve throughout these years, even though we are not meeting regularly, we are not, we're not even in the same regions, we are spread out across the world, but we have been able to produce a lot of good things for the sector during all these years. So my vision is that hopefully we continue with that spirit of collaboration. I think this piece around climate change is something that, we cannot address individually. So, things like what Robbie was describing in terms of adaptation and other things, if I hope that, part of the agenda incorporates more a group work around topics like this, so that we can continue to see, this collaboration moving forward and the benefit of being part of this group with so much knowledge about things like what we're facing right now.
Thank you. Robbie?
Yeah, maybe in terms of the 2024 perspective, we're a bit over halfway through the year now. And I think, again, just as coffee prices were a bit down last year, they're a bit up this year. And I think that provides some tailwinds for growth in the coffee market. We're looking at roughly expecting to end the year somewhere between 10 and 15% growth over 2023. We're seeing stabilization in Peru after a challenging 2023 year, and also pretty strong client acquisition in that area. There's also been a rebound in the macadamia market in Kenya. I don't think we talked too much about that in this call, but it was a very difficult year in 2023 with, I think, the Europe recession impacting demand for macadamia, and also a strong supply coming from other locations that were really hitting the suppliers there in Kenya. And I think that market has come around, and it's been a stronger year. I think the biggest wild card for our clients, and we haven't had too much time to discuss this, is the EUDR regulations. We are working with clients right now to understand their readiness for compliance and their plans in terms of for those that maybe can partially comply or can't comply, how they're finding other origins to ultimately sell to. And so, I think that kind of perspective for 2024 is, provided that there's no major disruption from the regulation, but this is definitely something that we are following closely, but also developing a response to support clients, because it's, I think it was 2/3 of our clients are impacted by this roughly. And so, we're just getting off the ground, some workshops that we're providing clients to orient them to the rules and how to think about managing through this. We're in the process of working with one of the vendors that are doing the risk mapping to be able to allow access to our clients, so that way they can own their data and understanding of their data of the locations of where their farmers are based, and ultimately, take corrective actions and really drive, improvements within their supplier base to meet the compliance standards and kind of own that process, as opposed to having to kind of wait for the buyers to get back to them on the data. And so, yeah, I think overall looking pretty good for the year. But we are concerned about the prospects of the UDR regulation.
Yeah, it's a good call out. We have a page in our report that explores this further for the audience. I just linked it in the chat. But it sounds like there's an optimistic year ahead for at least Root, and as well as some challenges that you'll confront along the way. John Mark, could you sign us off with your perspectives?
Yeah, well, from a macro point of view, I wish I could tell you that 2024 will be a better year than 2023, but I don't think that's going to be the case. I think it will be even more challenging. It's a highly charged, from a political point of view, it's a highly charged year with a massive number of elections, 4 billion people voting. And of course, there's a lot at stake. From the beginning, the first elections that took place in Senegal, and of course, the one in the US in November. So this will influence the world in which we live and in which we operate, and of course, the way we operate as impact investors. I don't think the funding costs will come down this year, or at least not substantially. And there will still be probably increased volatility of prices of currency. So that means still a lot of risk, and therefore a lot more worries for all of us. However, let's not give up all hope. It's in the face of adversity that we find great solutions and better ways of working together. And if we look in the last 4 or 5 years, 2 fantastic solutions for the sector. One is ACELI, that provides subsidies for the missing middle and origination fees to incentivize impact investors like us to provide more financing to those small SMEs. And the other one, you mentioned it, Andrea, Snoop, the Luxembourg-based scaling up network, has been fantastic in providing technical assistance funds to a number of impact investors and being completely agnostic about it. Now, these are the kind of solutions that I wish more actors that have the resources would support, because this is what we need. And of course, CSAF has been existing for more than 10 years now, but CSAF is also one of the solutions, long-term solutions that benefit the sector. And so I would encourage all people in attendance here who work for organizations that are resourceful, that DFIs, for instance, to support us, to provide us the kind of portfolio guarantees, the first loss tranche that we desperately need, because the world of tomorrow will be more challenging than the world of today. So we need you. SDG 17, partnerships for the sustainable goals. We all need to work together on this.
Thank you, John Mark. I will echo John Mark's call to action that we're really trying to move things forward in the sector, move forward concrete new solutions, and we're innovating every day, and we can't do that alone. So it's important to find partnership in not only our institutional members, but other sector stakeholders who can join us in this vision and this goal for a more sustainable sector. So thank you, John Mark. Thank you to everyone who joined us today, and to the many, many of you who stayed on for an extra 5 minutes. I'm glad to hear that the conversation is engaging enough to keep you here, and we'll continue this conversation in bilateral calls in the coming months, and we hope that you can join us in the conversation and all of our activities moving forward. So thank you again to the panelists also for leading this dialogue, and to Ada for the many insights that you're providing us. Thanks, everyone.
Thank you.
Thank you. Take care.